Hello, everyone, and welcome to a new edition of Merrill's Monday Morning Market Madness. Coming at you today with a quick update about the Phoenix residential housing market. This week, we're going to kind of examine, what's going on. It definitely feels like we are starting to see a slowdown, and so we're going to talk about what that looks like and show you what it looks like, and talk about what our path to possibly a more balanced market might look like. So as always, I like to start off with some key numbers. So right now we have 5,355 active listings on the market. There are 12,139 listings that are currently pending. 9,421 homes have closed in the past 30 days, giving us a current month supply of inventory of 0.57, which is actually the highest month supply of inventory that we have seen since February. The active listing count also around the highest that we have seen since February. So at the moment, and this trend has been continuing now for well over like 6 weeks. More listings are coming on the market than what is actually selling. So the active inventory is increasing slightly. The number of homes closing over the rolling 30-day is staying really steady, right around 10,000 closings. So since we're just 1 week here into June, I thought I'd give you guys the final numbers for May, because that is actually really quite interesting. So the month of May in our MLS saw 9,675 closings. The average sales price for those 9,675 homes was $506,433. I do believe it is the first time that we've seen an average sales price above $500,000. I do want to point out the median sales price is much lower than that. I believe the median sales price, I don't have that exact number, the median sales price is right around $450. That basically, you hear that average of 506,000. That number can get skewed pretty dramatically by some of the more expensive sales. For example, we did have a home sale in the month of May for over $14 million. The total volume of closings in the month of May was 4.9 billion, which is actually a slight tick down. Really surprising, because usually May and June are the busiest months of the year for our MLS, but April surpassed barely 5 billion. The average sales price in April was only 494,000. So in 1 month, so from April to May, the average sales price increased by $12,000. But April had 10,208 closings, so they had an extra 600 homes close in the month of April. So they actually sold about 5 billion instead of 4.9 billion. So yeah, slight decrease in the total volume of real estate that sold for the month, but again, average sales price is up. Comparing it to May of 2020. So May of this year, 9,675 closings, average price of 506,000, and 4.9 billion in total volume. If we compare it to May of 2020, now, in all fairness, the numbers of May in 2020 were very skewed because of COVID, right? The market had picked up by May, but what was actually closing in May, right? If you had a house that closed in May, that means that it needed to have usually gone under contract in March or April. Well, a lot of jumbo loans got shut down. A lot of normal loans got shut down. A lot of people just backed out of the deals. No one really knew what was going on. So by June of 2020, we started to see normal numbers again. But May of 2020, the numbers were a little off. So May of 2020 only saw 7,047 closings. So we're up, whatever that is, almost 30% or something like that this year. But this is the kicker. The average sales price in May of 2020 was $353,782. So the average sales price currently at 506,000 represents a 43% year-over-year increase. That's just insane. Now, so I thought, okay, well, and the total volume was 2.5 billion. So I thought, well, maybe that, again, maybe that number is skewed because a lot of the higher end homes weren't closing yet, and the luxury market got hit really hard, with COVID and in May. So, but even if you look at June, so June of 2020. We were back to a normal number of closings, 9,722 homes closed in the month of June. And the average sales price went from 353 to 369,000. So they saw an increase of, $15,000 month over month from May to June of 2020. So, but even if you take that 369,000 to today's 506,000 in the average sales price, obviously, it is a huge, huge exponential jump. I'm going to go ahead and share my screen with you guys now because I want to show you a couple of quick things here. All right. So I like to look at this website on a very regular basis. It takes a look at what rates are doing. Right now, according to Freddie Mac, the average rate on a 30-year fixed rate mortgage is 2.99%, which, as you can see, we were at an all-time low of 2.65%, and that was on January 7th. Then rates increased to a high, not an all-time high, obviously, but a high for the year was April 1st at 3.18%. Then we dropped back down to around 3% in April, and it has been holding right around that number now very steadily since April 1st. So not a lot of fluctuation in the 30-year fixed rate mortgages recently. The reason I like to look at that is because I do think that interest rates could have a pretty dramatic impact on the housing market. A big thing that has fueled the huge increase in prices is affordability. Yes, prices are rising incredibly fast, but if you can finance it at a 3% interest rate, it feels a lot more palatable to people than if they had to finance it at a 5 or a 6% interest rate. So I think that the slight slowdown we're starting to see in the market is possibly being fed by affordability. Affordability is going to start to become a bigger factor. I think we're going to start to hear a lot more people talking about it, and so if rates go up, that will have a dramatic impact on affordability. And then I just wanted to show you. So again, I've shown this before, but we graph every day the month supply of inventory and how many active, pending, and closed listings there are. Let me zoom in on this for you guys a little bit. So you can see that the month supply of inventory line went a little. First of all, you can notice that it's higher than it has been since we're around March 1st or late February. So very high. Well, when we say very high, I want you guys to take that with a grain of salt here because it's still incredibly low. So yes, we're starting to see inventory creep up a little bit, but it is very, very far from a balanced market, 0.57. These numbers here got a little wonky. The month supply of inventory numbers bouncing all over the place here instead of the normal curve because we had a strange kind of end of the month. A lot more closings happened, and then we had a holiday, so that got a little bit wonky right there. Actually, you know what? Well, I'm gonna have to look at that later. I think one of these numbers might be entered in wrong because I don't think we. Yeah, I don't know. 0.41. I think that one right there might be a mistake, but I'll have to go back and check that. But just to show you, like, okay, if we were in a balanced market, we would need a month supply of inventory around 5. So I'm just gonna change this number to a 5, just so you can see what that would look like. All right. So this is what a balanced market would look like with a month supply of inventory around 5, maybe 4. Okay, now suddenly it makes our inventory look ridiculously low, and the slight increase that we've seen is practically not even noticeable, right? And then same thing with the active, pending, and closed listings. So you can see, the pending listings has been holding, very steady around 12,000 pending listings at any given time. The total number of listings closing over a 30-day period is very steady, right around 10,000 now for several months. And then the active listing, that's this blue line here, you can see it is starting to kind of creep up. We're getting over the 5,000 line, for over the last couple of weeks for the first time. But again, if we wanted a balanced market, we would need an active listing count of somewhere around, let's call it 40,000. So again, I just want to graph that so you can see what it would look like. So active listing count up here around 40,000, with us selling around 10,000 homes a month. That's how many listings we need to reach a balanced market. So yes, it's very exciting. Inventory is going up, but I guess the picture that I'm trying to paint here is that we still have a very, 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 very long way to go before we reach even a semblance of a balanced market. I expect it to remain a very strong seller's market for a very, very long time, years most likely. We will continue to see home values rising as long as rates stay this low, and I don't think we're going to see a big change in the market. But it is exciting that we're starting to see it go up a little bit. So instead of there being 20 offers on most houses, it's starting to feel like there's only 10 offers on most houses. So it's still insanely competitive, but not quite as ridiculous as it was a couple of weeks ago. So anyway, that is it for the show this week. I hope you found the information helpful. Let me see here, stop sharing. And if you have any questions, or maybe you'd like to know more specifically what's going on in your neighborhood, or you'd like to get an update regarding the value of your home or anything like that, please let me know. I would be more than happy to assist. Thank you and have a great day.